Yo guys, welcome to my new YouTube channel. My identification is Real Time Economics, and I'll be posting videos and views about news and economic happenings in the world today, as well as provide my opinions on what I feel is the best way forward for investing. I'll be looking to post at least once a week, so if you like my videos or find that I've given even a bit of knowledge, please do not forget to like, comment, and subscribe. Thank you. Today, when we talk about the world, we talk about the free falling emerging market currencies versus the strengthening US economy and the dollar. Many emerging markets, such as the Turkish Lira, South African Rand, Argentinian Peso, Iranian Lira, Chinese Yuan, and the Indian Rupee, are all facing extremely bearish sentiments from the investors on their economy, and things aren't looking to lighten up in the near short term. The Turkish lira, for example, is down more than 40% this year, and coupled with this corporate debt of almost $300 billion that are mostly dollar based, repaying the debt to banks will prove to be a major issue. The crippling economic sanctions and tariffs applied to trade, along with the president's insistence on not using interest rates as a way to curb inflation, is magnifying the already big problem faced by Turkey. Inflation's already up over 100% this year, and the current situation doesn't look like it's in the stage of easing in the near future. One thing very surprising though has been the Indian rupee. It's the worst performing Asian currency this year, down by almost 11% after a very bleak August, and it is weighing down very heavily on foreign direct investment. Oil, which is a major factor of downfall as it continues to rise and is projected to hit almost $80 a barrel by end of October. India, being a country heavily reliant on imports, especially oil, which imports more than 80% of its oil, will continue to face downward pressure on the rupee as most of its oil is dollar based and as prices continue to rise. Even though markets are at an all-time high and manufacturing numbers are good, analysts still feel that the rupee is highly overvalued and there is much room for depreciation. And because of this, investor sentiment is bearish. The Fed is projected to raise rates by a quarter basis point around 2 more times this year, as inflation numbers and job numbers look strong, along with positive manufacturing data. However, I feel that the Trump administration, although independent from the Fed, will not allow these two rate hikes to happen, as it will cause the strengthening of the dollar versus the emerging market currencies and will be bad for the US trade balance. The transformation of an economy driven by almost zero interest rates, sometimes even negative as seen in the EU and Japan, coupled with policies such as quantitative easing, pushed a lot of money into these emerging emerging markets over the last 10 years. The problem is finally surfacing when the Fed and other independent central banks continue to tighten and normalize monetary policy by slowly increasing interest rates. But it's proving to be too much for these emerging markets to handle when they have stacked up more than $40 trillion of debt since the last recession. Mind you, most of it being dollar based. In addition, we can also expect gold prices to continue its fall as investors find better returns staying invested in the dollar with potential rate hikes. Market sentiment currently are more pro-US based as many economies aren't showing any signs of prospect or growth. As Trump continues to protect his anti-free trade stance and the US economy continues to outperform all growth numbers, we can expect the dollar and the markets to continue to strengthen. In the coming weeks, we should watch out for the Fed meetings that are absolutely vital for the economy, the world economy, and the US meetings with response to China and Canada regarding trade, as this may prove bullish for the dollar. But for now, short-term investments in the US dollar and long-term holding of cash looks like the best and most viable options. Anyways, thank you for listening to me today, And if you have any queries, do drop a note in the comments below. Again, please don't forget to like, comment, and subscribe, and I will see you next week for another dose of real-time economics. Till then, goodbye.